right, welcome back. Let's do some analyst calls on holding today. Upgraded following its earnings. It's up 100% year to date. New record high today. Fourth positive session out of the last 5. Jimmy owns that stock. What do you think?
Boy, it's been fun. It's been fun. I hope others watching own it as well. Projected earnings per share growth is above 30% in the coming 12 months. I think when you look at that and you compare it to a multiple that's in the high 40s, I think that's fair. I think the estimates are likely to go higher after earnings. There's a lot of expansionary things going on here, whether it's expanding into apparel from shoes, whether it's going to hiking shoes as well as running shoes, whether it's new geographies. There's a lot going on fundamentally to like here. And again, for the second time, I'm going to reference Joe. The momentum's terrific.
The price targets got bumped. BTIG 64, Telsey 62, Williams at 60. Let's just throw that up again. Just to remind our viewers where it's currently trading now as we go through. So you're at 54 and change, but that chart is really straight up and to the right. As we said, it's a double.
But it comes down. Look at that. You're looking at it right now. There was a moment just about a month and a half ago where it came down. Great buying opportunity. It'll probably happen again if it sees it. If you see that, folks, you can get right in.
All right. Walmart, speaking of Telsey, they call it their top pick of the holiday season, Shan. Outperformed $92, $91 at Deutsche, and $90 at Gordon Haskett. What do you think about the stock?
Yeah, so we've seen this consolidation, right, in terms of the combination of value and convenience for shoppers. You've seen a lot of the fixed price stores really under a lot of pressure over the last few months, and that consolidation by both Walmart and Costco of these buyers up and down the income chain, you're seeing that continued strength. And so, I think that there's really starting to be a bifurcation here in terms of retail and those stores that can capture those consumers up and down the income spectrum. I think you're going to be in well positioned for 25.
Joe, you own the stock, right?
I do. It's the economy of scale, and clearly for Costco and Walmart, they're benefiting relative to Target. Let's keep in mind the holiday season is shorter by 1 week. You have Thanksgiving on the 28th. We all return to work on the following Monday. It's December already. So obviously brick and mortar retail is going to struggle in that environment. I think the winners are going to continue to be Amazon, Costco, and Walmart.
What about Block? Outperform at Bernstein today. Should gain under the new administration, they think. What do you think? Because of the pro-crypto stance and deregulation. Do you agree with that?
I mean, that's what it is. It got added to the ETF on October 31st. It was added purely for momentum. Now it's benefiting from the crypto environment. The revenue growth is not really there. I mean, you're talking about a company that was growing at 20% just 12 to 18 months ago, now single digits. So I can't make a strong fundamental argument. I'll call it exactly what it is. It's momentum at its purest related to the crypto.
All right. Netflix reiterated by Jeffries, a new record high today. Joe, you own it personally and in the ETF,
and staying with it in both of those positions. Why? Because we could talk about, put the technicals to the side. How about the fundamentals? Friday night, you have Mike Tyson versus Jake Paul. Let's go Mike Tyson for all our older guys. And then on Christmas Day, can you come up with better games than Chiefs, Steelers, Ravens, Texans? 282 million subscribers. Turn the calendar into January. Here comes WWE once a week. You know, at some point, UFC is going to get involved in this. So live sports is the future for Netflix. And after what they went through with passwords and ad tier, it's just another strong fundamental catalyst.
All right.